When you are making a loan payment, you want to make sure it says loan payment. When you are making a premium payment, you want to make sure it says premium payment. You can set loan payments up so they are just automatically drawn every single month, just like they would from a bank. You can randomly send them in. You can pay however you like. Life insurance company doesn't care. They're in the business of life insurance. We put them in the business of banking, and they're totally okay with lending us money, but that is not their main gig. And you got to remember, Nelson wrote the book, Becoming Your Own Banker. It is not the life insurance becoming your banker. It is not Mary Jo becoming your banker. It is you become your own banker. Hello, and welcome back to the podcast. Thank you very much for being here. All right, today let's talk about how loan repayments work and how loan interest works. I am sure that I've gone over this before, but it is something that is a super common question, and I think the most confusing part of infinite banking, because the loan interest inside of your life insurance policy does not work like loan interest at the bank. And so let's get into that. All right. If you take a loan from the company, if it says online that your available loan balance is $10,000, you have access to that full $10,000. They already are holding interest in the back end. So they take it, they hold it. If you cancel the policy, they're going to send you the $10,000 plus whatever interest you're not seeing online. But if you take a loan, interest is prepaid essentially, but it is only prepaid through your policy year. The loan interest is not calculated based off of calendar year. It is calculated based off of policy year, and it's actually calculated down to the day. So if you take a loan on July 1st and your premium is due January 1st, you're going to prepay 6 months of interest. If you pay it back in those 6 months, they prorate back to you what they didn't need. If you pay it monthly, they're going to prorate back to you every month what they did not need. And they're not just prorating it back so it's increasing cash value. Any interest that is prorated goes to and applies to principal payments. So it's actually paying your loan down faster. So you're thinking, oh, I'm making a $500 a month payment. No, it's actually $500 plus whatever the interest that they have to prorate back to you to the day is. That then pays down principal. So what happens is when people are trying to figure out how much interest do I need to deduct on my taxes, because it's about tax time, right? We're at the end of the year. People are looking at, hey, I use the loan for business expenses, so I want to expense the taxes. Well, you can do that. It's very hard to figure out what the interest was because it's to the day, and then it's calculated based off of policy year, and it's almost impossible to get it exact. Some companies will give you what your interest was for the year. Some companies will not. So now is about the time of year everybody's trying to figure that out. So this is what I tell people. Whatever your loan amount was, January 1st, take that times the interest rate they're charging you. And that is what it is for your calendar year. If you made payments throughout the year, then you're going to have to deduct some of that. Then you might just want to run an amortization schedule. That's going to get you close enough, or you can ask for accounting from the company, and if the company doesn't send it out. So there's that. Anyway, back on track. So the interest is prepaid. When you make a loan payment, it all goes towards principal because they've already got their interest. So that's why when you make a $500 payment, you have access to $500. Now, if you make your premium payment and you're like, oh, I'm just going to send a check in randomly with no documentation, the insurance companies will automatically use money to make a loan payment before a premium payment. So when you are making a loan payment, you want to make sure it says loan payment. When you are making a premium payment, you want to make sure it says premium payment. You can set loan payments up so they are just automatically drawn every single month, just like they would from a bank. You can randomly send them in. You can pay however you like. Now, at the end of the year, and you guys have heard me talk about this a million times, at the end of your policy year, you're going to get a statement that says, or a bill that says, this is how much your premium is, and this is how much interest you owe going forward. Because if you have a loan and your premium comes due, they want you to prepay the interest. If you don't prepay interest, then that interest compounds. And when you make your premium payment, the life insurance company says, oh, that's awesome. Thank you very much. We're going to grab what we need to prepay interest for the next year. So your cash value is not going to go up by what it should go up because they're grabbing for interest. So if you make your premium payment plus your interest, then you've prepaid it out of pocket for that policy year, not for the calendar year. And so if you can't make the principal payment, fine, make the interest only because it's going to compound from policy year to policy year. Okay? Making loan repayments is easy. Just do that, like I said, however you want. Set it up monthly, randomly send them in. I mean, you can do whatever you want. I just randomly send mine in. But I am always making sure that I make the interest only payment if I haven't made principal. And there are times where I won't make a principal payment. Like when we bought our Airbnb property, it needed to be renovated. Well, it was taking long to renovate it. We had a bunch of snow that year. Contractors weren't showing up. I said, forget it. I'll just make an interest only payment. I'm not going to worry about when this thing gets paid back because I was the only one that has to worry about it. Life insurance company doesn't care. So it gave me some flexibility, but I wanted to make sure that I paid the interest so that didn't compound from year to year. There are even times where I might miss interest one year. Like I'm going to say, oh gosh, I'm late on my payment because if you're going to pay interest, it needs to get there before the renewal date. Otherwise it compounds. So there are some years where I'm like, oh, I missed it. Okay, so I missed it 1 year. It's not the end of the world if I have a small loan. The problem becomes when you miss it for 10 years or more, and then all of a sudden you've got so much interest that when you pay premium, there's no cash value to borrow from because it's all going to interest because you're not paying the interest or the loan back. So you have to make sure that you are being an honest banker and treating that honestly. The fact that interest is prepaid is the piece that really confuses people. Because they think, well, how much interest can I just pay my interest for the year? No, because it's not calendar year. It's policy year. And unless your policy starts on January 1st, it gets super confusing. When we are looking for taxes and your policy starts in April, taxes are due from January to December. So just understand that. I've had a couple of people asking recently, just because it's tax time, what interest did I pay? And they're forgetting that they've prepaid interest and that the insurance company is not a bank. They are not sending you an interest statement. And I don't think that they should. Like some people are like, oh, they should. No, they shouldn't. They're in the business of life insurance. We put them in the business of banking and they're totally okay with lending us money, but that is not their main gig. They are not a bank. They are a life insurance company, and we shouldn't want them to change what they are experts in, right? Because in their field, we want to make sure that we're going to have death benefit when somebody passes away. We want them to be actuarially sound, financially sound. I don't need them to act like a bank. I can take that responsibility on. And you got to remember, Nelson wrote the book, You Becoming Your Banker. Becoming your own banker. It is not the life insurance becoming your banker. It is not Mary Jo becoming your banker. It is you become your own banker. And so you want to make sure that you're running spreadsheets or amortization schedules or whatever. If you're a client, we can run an amortization schedule for you. You can go to calculator.net. is a new website that I found that has just about any calculator possible on there. Not perfect, but close enough. That's what I say, close enough. All right, I hope that helped answer that question. Interest is truly one of the biggest issues or one of the biggest questions that people have. So just trying to answer that. Let me know if you have more questions about this so that I can make sure we clarify them. Otherwise, you know the routine. Email me, MaryJo@WithoutTheBank, or go to withoutthebank.com, grab your books, and make your appointment. And I am happy to visit to see if we can help you.